see obviously for that whole year that this baby started out down at 120 in June, July of 2010, and in August of 2011 it's up at 144. So huge moves. At its height, it had gone up about close to 3,000 pips. It has pulled back some of that, about 500 of that. So we're still in an uptrend, even though if you're looking at the minuscule charts, it looks like we're downtrending. But I'm going to cover that in a moment. That's number one. Second thing I want to do is take a look at the Fibonacci. I want to do two things. Let's take the whole move and see if that's in play. And you know what? Sure enough, it's right in play where we are right now. As the currency started to pull back off this high, it went right to the 38 fib, found support, and bounced. And over the course of the last 2 weeks, it has been playing off that 23 fib on the daily chart. So both of those levels, price action-wise, are very, very important. If I look, and again, you've heard me say this before, but let's say it again. Just as we teach our kids crossing the street, look left or look right, when we're trading, the critical thing is always look left. Look to the left of your chart and see what else it's telling you in relation to those levels. You mark the 23 fib and look over here. That same level that was support here, was resistance here, was support here, resistance, support, and so on, was big resistance over here. On the first initial up run of the euro, it found resistance at that 142 level and then dropped 1,200 pips off there. So this is a significant level that we're at. I also want to note this level here, because this is where we found support pulling back off the top. Let me just drink some water, guys. It's better. Sorry, my voice is getting a little dry. Also want to mark the 38 fib. Now, we know that those two red lines are my 23 and 38 fib on the daily chart. I'll now let the fib go. I'll release it because I don't want to clutter up the charts as I drill down through the different time frames. Is there anything else that we can garnish here before we leave the daily chart? Yeah, there is. Let's look for trend lines. And the first thing I see is a series of lower highs coming into play. Right there, very visible. I also see a second piece of that trend line right here. So you can see that it's in a channel, working its way down. Now let's blow it out a little bit. It looked like 3 days ago that it was breaking through that channel. However, that's why it's important to go up to the higher time frame charts. You can see on the daily chart, it never did. If I look at that same move down on a 1 hour chart, you can see what looks like a break right here above the trend line, but it came right back in. So very important to always go to the higher time frame charts and make sure when you say there's a break of a trend line that there really is a break. It takes quite a bit to break a daily trend line, and sure enough, she comes back in and starts falling down again. That's an important piece of news for me to know. Had not the sustainability to get above the trend line and stay up there. So that trend line with this top right here is still in play right here. Now we can leave those trend lines intact. Now drop down to the 1 hour. I like to see on the 1 hour chart at least 2 weeks of trading activity. And then look for the trend. Read the chart always from left to right. I can see already that on that chart I have my trend line from the daily chart showing up, and I have that 23% fib showing up also. Now I'll put another fib on here. Reading left to right, go from the bottom to the top in the direction of the prevailing trend reading the chart left to right. Now I'll leave this Fibonacci on there because I want to, use it as I drop down further. Is there anything else I can garnish? Any other information from this particular 1 hour chart? Yeah, I see this sharp trend down here. Look at this here, pretty sharp to the downside over the last 2.5 days of trading. That's a pretty steep drop. So top to bottom, 240 pips plus. Now go to the 30-minute. All of our information is now on the chart. I have the big fib, and I see that pullback here on the 23 fib was also a 50% fib on the 2-week Fibonacci, right? I know that that red line is my 23 fib of my daily chart. Is that right? Is that the 23? Just 1 sec. Let me be sure here. Is that the 38? This is the high. I'm over here. Yes, the 23. Sorry, guys. I want to be 100% sure. 23 is here. 38.53. Back to my 30-minute chart. Yeah, that's my 28 fib on the daily chart. It's my 50% fib on the 2-weekly chart. And look at it in play. Again, remember our methodology. Look to the left. Look to the left. And sure enough, the same area was major resistance over here on the 11th, on the 12th, and it turned into support then on the 15th. So it goes from resistance on these 2 days and becomes support as it pushes up. And here we are back down again right here. Now you see that when it exhausted today, it did a double bottom on the 30-minute chart. It's always a good sign that that move has exhausted itself. A double bottom on the 30-minute chart, and then it pulls back. Now, if I do one more thing, this is important. I'm not going to confuse you, but I want to show you one more fib. Let me change the color of that. Sorry, this guy. Now, on the price action from the high to the low in the last 24 hours, if I put a fib on that, the reason I do that is I'm looking for what's the potential pullback. We have a double bottom here, and you've heard me say many times that almost always will pull back to at least the 23 fib, and that's exactly what it did. And that 23 fib coincides with the 38 fib from the 2-week. I just wanted to show you that. And looky, that's where it pulled back to. And now it's heading back down again to come back down and retest the bottom here. 30-minute chart. Now let me check my Rubicon indicator. One moment, guys. I want to bring it back up to the action today. And there it is. And there's that crossover on our spine, the trade, and off she goes. That trade is nicely making its way down again. That's the euro dollar. Now the one thing I did say, I'm going to say it again. Can you take it to lower time frame charts? Our recommendation is the following. You're better off sticking on the 30-minute chart because it's optimized right there. I will give you one exception. You can drop to the 15-minute chart because Rubicon works on all of them. You can drop to the 15 as long as you're with the prevailing trend. In other words, you're consistent with what's going on the 15-minute chart, on the 30-minute, and preferably the 1 hour above you. So let's look at the 1 hour. Has it crossed over the spine on the 1 hour? Yes, it has. Has it crossed over the spine and given us a signal on the 30-minute? Yes, it has. I can see then the drill down on the channel heading down, which we also saw on our daily time frame, intact as well. So in this case, I could look, if I missed the 30-minute drop to the 15-minute, look for potential further shorts off the 15-minute chart down here. And there's another one coming in right there. So you can do that. You know, for more precise entry points, sometimes you can do that. But again, bear in mind, guys, what I'm saying. Please only do it in relation to the trend. You know, stick with what's consistent with the two higher time frames above you. In the case of the 15-minute, I want to look at the 30, and I want to look at the 1 hour chart. And that's where we sit. Now, a couple of things I want to mention. Let me bring up the Euro Swiss chart. When we get intervention, let's look at an hourly chart. Yeah, when we get government intervention, this is the kind of things that can happen within the course of a day. Boom, 600 pips. Almost 400. And even again last night, yesterday, boom, 350 pips. Spikes up. So that's why, watch out for, please guys, when we're trading, make sure you have a news source. What do I mean by that? I want to be informed if there's any potential of government intervention. I personally have Bloomberg Television and Reuters. I have Bloomberg TV, I have the Reuters feed online, and I have CNBC. But at the very least, have one news source, whether it's through your cable TV or through an online source that keeps you updated to major news events as they unfold, and particularly major news events as they relate to the currencies that we're trading. If I look at the USD CAD today, let me show you something else. The Canadian for this week was heading down. For 2 days, it was heading down. Sorry, 4 days, all of this week. She dropped down at 150 pips. Now, what happened today? Look at this run up here today. That is US dollar strength. How do we gauge that? Well, here's a simple way. Many of you guys I know watch the stock market as well. If the Dow Jones and the S&P are crashing or tanking, the US dollar will be moving in the opposite direction, will be going up. Why would that be? I know it sounds kind of, that doesn't make sense. What it has to do with is risk or risk aversion, as people, well, what's called risk on or risk off. So let me leave you with this thought. If the markets are stable and growing and going in the direction where consumers and brokers like, it's going up, the Dow, for example, is going up, then people will take on more risk. When that happens, you'll see the movement towards currencies like the Australian dollar, the New Zealand dollar, the Swedish kroner, and even the CAD, the commodity currencies. When risk goes off, when the markets get nervous, people start pulling their money out of mutual funds, the stock market goes nuts, goes down, that's called risk off. The money then goes to the Japanese yen for safety, the Swiss franc, big time for safety, and, believe it or not, the US dollar, because it's the world reserve currency and because of the liquidity. People would prefer to have their money in a safe zone, even if the interest rate is negligible or negative. And as in the case of the Swiss franc, it's safe. People just want safety. So as the market was going up today, as the market was going down today, the US dollar was heading up against the other currencies. In particular, you can see it right there, an uptrend. Let's bring this guy out a little bit. And an uptrend against the Swissy, heading up. Ken is telling me